A historic squeeze is forming in the white metal, and the volatility is just beginning. Fasten your seatbelts. This is the Silver Shock. Chapter 1. The Supply Challenge. Many investors overlook silver, yet the data confirms a major structural shift. A tightening supply squeeze is now redefining the global market. This is not just volatility. We are entering a critical long-term deficit where consumption simply outpaces our ability to mine new metal. Geologically, the situation is challenging. Major mines are aging and ore grades are declining, meaning we must dig much deeper to find less. Unlike gold, silver is constantly consumed. When used in electronics, it is often discarded, effectively removing that metal from the stockpile forever. Industrial giants are taking notice. As technology relies more on this metal, securing physical delivery is becoming a top priority for manufacturers. Major producers such as Mexico are facing practical constraints. Policy changes, higher operating costs, and infrastructure limits are slowing efforts to expand production quickly. For several years, silver supply has not fully matched overall demand. Existing inventories have helped balance the market, but those reserves are gradually declining. If demand remains robust while supply struggles, basic economics suggests a significant and potentially historic repricing event is now on the horizon. In this video, we analyze the supply and demand data to understand why silver might be the most critical asset of this decade.
Chapter 2. The Industrial Engine.
Silver is the backbone of green energy. Its superior conductivity makes it essential for the photovoltaic cells that power every single solar panel. As the world transitions to renewable energy, the solar industry's appetite grows, now consuming millions of ounces of physical silver every single year. This industrial demand is sticky, driven by government mandates, providing a solid floor for global silver consumption that is unlikely to disappear. The electric vehicle revolution is a major driver. EVs act as computers on wheels, requiring significantly more silver than traditional combustion cars. From battery management systems to electrical contacts, silver is critical for the performance, efficiency, and safety of every modern electric vehicle. By 2030, the automotive sector alone is projected to consume a massive percentage of the annual silver supply, driven by global EV adoption. It's in your pocket, too. Smartphones, laptops, and 5G devices all rely on silver's unique properties to function in our digital world. The global rollout of 5G networks requires silver for high-speed connectors, adding another layer of consistent and non-negotiable demand to the market. Beyond tech, silver is vital in healthcare. Its antimicrobial properties make it indispensable for sterilization and advanced medical equipment used worldwide. In aerospace and defense, reliability is key. Silver is used in jet engines because it performs under extreme conditions where other metals fail. This is the key difference. Gold is stored, but silver is used. We are chemically consuming a monetary metal, permanently altering the landscape. Recovery is difficult. Much of this silver ends up in landfills because it is often too expensive to recycle from tiny components.
This leads to depletion. We are using up accessible reserves for industrial progress, creating a long-term scarcity that the market must eventually face.
Tech companies are aware of this bottleneck. Securing direct supply lines is becoming a strategic necessity for major electronics manufacturers globally. While substitution is possible, it impacts performance. For high-end tech, silver remains the undisputed king of conductivity, with no equal in elements. Data from the LBMA shows a clear trend. Physical inventories are drifting lower as industrial offtake accelerates year after year without pausing. This tightening physical market can lead to higher premiums, where the price to buy real metal diverges significantly from the paper spot price. If you believe in a high-tech, green energy future, The math suggests you should also be paying very close attention to the silver market. Industry bodies report structural deficits, confirming that we are simply using more silver each year than we are currently capable of digging up. This dynamic transforms silver from just a speculative trade into a critical strategic material that is essential for the 21st century economy.
Chapter 3. The mining reality.
Ramping up supply isn't simple. Building a new mine is a capital-intensive process that can take a decade or more to come online. We have already mined the easy fruit. Miners are now facing lower ore grades, requiring more energy and effort to extract the metal. Inflation impacts mining significantly. Rising costs for diesel, equipment, and labor are pushing up the baseline cost to produce each ounce of silver. Geopolitical factors also play a role. Resource nationalism and labor disputes in key regions can disrupt global supply chains unexpectedly and rapidly. Because of the long lead times for permitting and construction, the mining industry cannot react instantly to sudden spikes in silver prices. Crucially, most silver is a byproduct of copper, lead, and zinc mining. This means silver production is often tied to other metal markets. Environmental regulations and weather events add further complexity, often delaying projects and restricting output in key regions that produce the most silver. The permitting process has become rigorous globally, creating high barriers to entry for new exploration companies looking to find the next deposit. With primary silver mines becoming rarer, the market is heavily dependent on the stability of global base metal mining to meet demand. Even historical powerhouses like Mexico are seeing production plateaus, signaling that global supply growth may effectively be capped for the foreseeable future. Years of low prices led to underinvestment in exploration. The industry is now playing catch-up to find the viable deposits of the future. In economic terms, supply is inelastic. A higher price today doesn't immediately result in more metal produced tomorrow, keeping the supply tight. This lag creates a window of opportunity where demand outstrips supply, potentially driving prices higher to achieve a necessary market balance. The mining sector works hard, but geological realities suggest that the era of cheap, abundant silver may be a thing of the past. Understanding these supply constraints is the key to grasping the full, long-term bullish thesis for owning silver in your portfolio today.
Chapter 4. The investment case.
When structural deficits persist, price is often the mechanism that restores balance. Many analysts believe silver is undervalued relative to its utility. History shows that silver can be volatile. In past bull markets, it has demonstrated the ability to make rapid and significant price moves. Often called gold's volatile cousin, silver tends to amplify the moves of the gold market, offering potentially higher percentage returns during rallies. Investors should distinguish between paper silver contracts and physical metal. In a tight market, owning the physical asset is the only guarantee. Physical silver carries no counterparty risk. It is a tangible asset that exists entirely outside the digital banking system and its vulnerabilities. Retail demand is a powerful force. During times of economic uncertainty, we often see a massive surge of interest in coins and bars. A growing community of investors is conducting deep due diligence, sharing data on vault levels, premiums, and supply trends in real time. For many, silver acts as a hedge, a proven way to diversify a portfolio against the risks of inflation and currency devaluation.
Its dual nature, part money, part industrial commodity, makes it a unique asset class that responds to multiple economic drivers at the same time. While mainstream financial news often focuses on stocks, the commodities sector is flashing important signals that savvy investors are watching closely.
Forecasts vary, but many commodities experts are revising their long-term price targets upward based on the undeniable green energy transition data. It is the convergence of monetary demand and industrial necessity that creates the perfect storm for potential price appreciation in the future. Silver has preserved purchasing power for thousands of years, successfully surviving the collapse of countless paper currencies throughout recorded human history. In previous shortages, premiums spiked and delivery times extended. Being positioned early is often the best strategy to avoid the crowds.
The fundamentals are strong. With capped supply and rising demand, the stage is set for the next major chapter in silver's history.
Chapter 5. Conclusion.
The numbers tell a compelling story. The supply and demand imbalance is a reality that the market must eventually address with higher prices. Are you watching the physical market? Understanding these structural trends is crucial for anyone looking to protect their wealth in this economy. From solar farms to electric vehicles, the world needs silver. The critical question remains, will there be enough metal to go around? In a world of digital promises, there is a distinct security in holding real, tangible value like silver in your own possession. The opportunity is here. Do your own research and decide if silver has a proper place in your long-term investment portfolio. If you found this analysis helpful, please subscribe to the channel. We track the hard data that the mainstream media often ignores.
Hit the notification bell to stay updated.
I want to hear from you. Where do you see silver prices heading this year? Let me know your thoughts in the comments below.
Thanks for watching. Stay informed, stay prepared, and protect your purchasing power with real assets. We will see you in the next one.
Join us next time as we dive into the gold market and central bank buying. You certainly won't want to miss it.